In another video, we explored the basics of credit and credit reporting. But what about credit scores? What is a credit score? Is there a good or a bad side to credit scoring? How is credit score calculated? What is FICO or Beacon? What are the benefits of credit scoring? What are the downsides of credit scoring? In a nutshell, a credit score helps you request for credit to be approved. It can also mean loan interest on loans or even insurance rates. Low credit scores can cause higher rates and loan denials. But how is a credit score calculated? The credit scoring agency utilizes a computer software designed by folks such as Fair Isaac Company. An acceptable point value is established based upon selected criteria which offers the lender insight as to the risk involved with getting the loan. The loan applicant gives information to the lender which is submitted to the credit bureau. Per Fair Isaac, the credit bureau then returns a credit bureau risk score, commonly known as FICO score, which is a snapshot of your credit risk picture at a particular point in time. Lenders can then be determined, if I give this person a loan or a credit card, will I get paid back on time? Is credit scoring objective questionable? Fair Isaac concludes that computers don't make lending decisions, lenders do. Computers analyze credit information as to produce a score. But individual lenders decide what scores are acceptable for different loans or credit cards. The problem is that subjectivity has been completely removed in the models. Models should make recommendations, not decisions, and that is usually not the case today. It is simply more expeditious and efficient to rely on the model. The model then becomes the decision instead of the guide. So what's the benefit of credit scoring? Considering what would happen without a model system, in many cases the result would be non-standard chaos based upon subjective guesswork and prejudicial criteria. For example, if I am a bald lender and very sensitive to long hair, isn't it possible without a measuring standard to be prejudicial in my decision to loan out money to a long-haired rock musician? Now add on something a little closer to reality like race, color, creed. None of these should be permitted in the decision-making process, but we all know of incidents with objective measures fully in place where it still occurs. How bad would it be without a system, any system, fully in place? On the other hand, what would happen if very few applications were turned down? There is no standard, so how can I, the lender, supposed to know who will and will not pay me back? I can't predict the future. The very reputable and honest person in front of me may well have extraordinary events occur tomorrow. Without some measure of prediction, I could lose more loans than are paid back. That's a tough way to stay in business and not too very welcome at the next meeting of the stockholders. What's a FICO score and how is it calculated? Information about you is collected from your credit report, from your credit application, and other sources. Data includes your bill paying history, the number and type of accounts you have, late payments, collection actions, outstanding debt, age of your accounts, and other information. Usually using the Fair Isaac statistic program or model, the creditors compare this information to the credit performance of consumers with similar profiles and award points for each factor that helps predict who is most likely to repay a debt. Thus comes the score, FICO score, and FICO 8 score, which means a credit score based on Fair Isaac Company FICO model. Credit information is weighted based upon its type and history. The more current the good or bad information, the more weighty the effect. For example, a very old 90-day late may be weighted less than a very recent 30-day late. The type of data is also weighted. Past payment performance is 35%, or at least in its weighed the heaviest weight. Credit information is 30%, or the next heaviest. Credit history is 15%. Types of credit in use is 10%, and inquiries is 10% or least weighted. What's a good score? The good scores will vary with the state of the economy and other economic conditions. The general U.S. population FICO score range as follows. Above 780 is 20% of the population. 740 to 780 is another 20% of the population. 690 to 740 is 20% of the population, and 620 to 690 is 20% of the population, and below 620 is another 20% of the population. Though credit reports can be obtained for free, a credit score will have an associated cost, but can be obtained from the same source from which you get a credit report. You can see the video Basics of Credit and Reporting. If you'd like to see more of this material in the future, don't forget to subscribe to my YouTube channel below. Give me a thumbs up also. Also, if you know of friends, family members, social, business, or social groups in need of financial education, do them and yourself a favor by telling them about Debt Buster Motivation. But at a minimum, subscribe to my channel below and give me a thumbs up. I do appreciate